Please welcome Colleen Anev-Janse from the European Stability Mechanism, who will provide an expert outlook on fixed income and blockchain convergence. Over to you.
Hello. I promise you this will be the most valuable presentation of the day. Well, I want to talk about markets, and I want to talk about why markets at the moment are buying Europe again. And if you start from the beginning of 2025, Europe is outperforming not only the US, but also outperforming the entire world. So if you look at the charts on the very left side, you see the equity prices, which is the MSCI Europe, which is just skyrocketing compared to the rest of the world and the US. More interestingly, if you go to ETFs, you see an outflow out of US ETFs and then a very heavy inflow in European ETFs, which are the yellow bars that go up while the US goes down. Now, if you look at fixed income, because the bond markets are still the biggest markets in the world, we see a real strengthening of the Eurozone in the European countries. So on the very left side, you see the 10-year spreads of France, Belgium, and Italy versus Germany, and you see them heavily contracting. This is despite the announcements of Germany to spend almost 600 billion more in defense financing. The markets didn't widen spreads, but they actually contracted them. And if you look at France, Belgium, or Italy, spreads are now around 1% or 100 basis points, which is at record low levels. Also, the countries that in the past were in difficulty, like Ireland, Portugal, Spain, Cyprus, and Greece, we as ESM borrowed to all of them in the euro crisis, are now contracting in spread levels and pay around 20 to 30 basis points above Germany. And also, if you look at European versus US treasuries, which is the discussion we spoke about reserve currencies at least the previous speaker, you see that European safe assets are really becoming more interesting. So on the left side, you actually see the spread of US versus Germany, and actually that is widening, which always is a sign of uncertainty, more now towards the US than versus Germany. And the real success story, I think, of Europe over the last few years has been to create alternatives to the US Treasury with European safe assets. So on the right side, you see the European bonds that are covered by all countries of the euro area, like my own institution, the EF7 ESM, or the entire EU and the European Investment Bank. Those moved from around 400 million to 1.4 trillion in the last 15 years. So this is really the strength of a common European response to COVID, to the euro crisis, and now also defense financing. Now, these safe assets are all AAA rated. And that is not the case for all the strong treasuries this moment. And they also have heavily contracted in spreads versus Germany. So while we paid around 60, 70 basis points at the beginning of the year, it is now down to around 30 basis points. So it means that global markets really believe in the strength of the European Union and European countries, which I think is a great contrast to 10, 15 years ago. Now, I want to say also a few words of the ESM, my own institution, because it is the largest international financial institution in the world. So if you look at the left side, you see our capital. We have 81 billion paid in capital in euros, another 620 billion capital, which is more than the European Investment Bank, more than the World Bank, more than the AIIB based in Beijing, New Development Bank in Shanghai, or Asian Development Bank, or EBRD based here. This was Europe's response to show the strength of the European Union, but also strength of the euro area. And you see that we are also a large sovereign wealth fund, a bit like you are. So we are investing ourselves in these strong AAA rated and strong rated governments, supranational financial institutions across 10 countries, 10 currencies in Europe, outside of Europe. And we also still value ESG bonds, not only because of conviction, but also because of their performance compared to brown bonds. And we're trading around 330 billion a year in these asset classes. Now, we are also a global financial issuer. We helped the 5 countries that are now contracting in spreads during the euro crisis. We have investors around the entire world, 1,800 ranging from China to Korea to the UAE and Americas. We're AAA rated and we issue around 30 billion in bonds. But the real interesting story here is that we have seen a tremendous increase in sovereign wealth funds in our books. So last year, in 2024, it was the record amount of sovereign wealth funds in our books, which is around 36%. And we also see that most of them come from Asia and the Middle East. So many of you that are in the room are part of our books, for which I want to say a very big thank you. But those of you that are not in our book, I think you should think about these AAA assets in Europe that are now an extremely interesting investment opportunity, safe, secure, and are looking for the future. Another trend I wanted to share with you as we speak about de-dollarization, the strength of the euro, is that we've seen the number of countries globally that start issuing euros is growing very fast. So we now have more than $1 trillion in these assets, and this popularity is across the globe. So if you look on the right side, you would say, okay, it's logical. Romania is not a euro country, but issues euro because it's in Europe. Poland, Hungary, Bulgaria, that is easy to understand. The ones on the left I find more valuable. Argentina, Chile, Mexico, China, Israel, Indonesia, Ivory Coast started issuing euro-denominated debt instead of issuing US-denominated debt. And why is that the case? Well, it gives you safety, security, less political influence, certainly in these days, and on top of that, much lower borrowing costs. So you see that in euro, we now pay around 2% if you go to the market. If you go to the market as US dollar, you pay 4 or 5%. So as an issuer, actually, the euro is an extremely attractive currency. Now, what to watch in 2025? The euro area is growing. And by the end of this year, you might have seen the news, we will add Bulgaria as another 21st country that adopts the euro. They take away the left and they move to the euro as the eurozone. So the popularity of the euro is growing. We had 5 countries in the last 15 years that they joined the euro area. Now Bulgaria, Croatia, Estonia, Latvia, Lithuania. So we see a growth of countries that want to get away from their own currency and move to the euro area. The EU and the euro amongst its citizens is at the highest support levels. We now have defense, finance and tariffs on our agenda, so next week's NATO summit will be very important. And my final message is Europe's conviction to the market has also to do with the reports and the assertive policy making. Last year, we had the Draghi and Letta report that presented what Europe needs to do better. And this year, we implemented those with the Defense White Paper, Savings and Investment Union, and Clean Industrial Deal. In different parts, these are 800 billion packages where more spending will be in defense. So I think for you, if you want to think about diversification globally, Europe is now the hottest place to invest. So think about that, consider that, and with that, I wish you a very lovely lunch and thank you for having me.